Jack Ma's and Group is planning to launch IPO, which is anticipated to be historically biggest with estimated IPO valuation of 250 billion US dollar and is the largest financial technology company in the world with more than 1 billion active users, which is enabling 2000 plus financial institutes and 80 million merchants to sell 100 trillion RMB of financial services and payment services. Alibaba owns 33% stake in Ant. As this is my first video, let me first introduce myself. For more than a decade, I have been doing investment in equity across major markets in the world. I am passionate about using investment methodology that is based on companies' fundamental and intrinsic value investing. I do not believe in speculative trading, but by consistently applying this method, I have generated significant wealth for myself, and I would like to share my analysis of companies based on this investment methodology with others who aspire to create wealth for herself or himself by investing in equity market. I have done analysis of hundreds of companies over many years. As and when I get time, I will try to share regularly here my analysis of these companies. Let's first understand business model of the company. The company provides online platform called Alipay for financial services mainly in China. This platform provides four categories of services: digital payment, wealth management, which company calls it investment tech, loan or credit services, which company calls it credit tech, and insurance called insurtech. Now looking in each of these categories of services, digital payments, consumers use Alipay app to make payment to merchants in store using mobile or online. Where the credit tech, it provides channel for partner banks or financial institutes to provide secured or unsecured loans through Alipay to merchants or consumers. It also provides risk management services to banks for offering loans or credit to consumers. It has its own credit rating system for all users of the platform. With regards to investment tech, this service allows wealth management partners to offer money market or investment funds through Alipay app to consumer as low as $1 investment. Where InsurTech allows insurance companies to offer insurance products such as health, auto, properties, etc. to consumer or businesses. Alipay also provides platform for third parties or its own to run their mini programs of daily digital lifestyle services such as payment for public transportation, ride hailing, taxi, ticket booking or educations, COVID related services or the food delivery or travel booking or charity. Alipay is powered by underlying technologies such as Alibaba's cloud computing to run Alipay app, blockchain technology, which they call it Ant chain, for secure financial transactions, artificial intelligence or machine learning for targeted marketing, and analytics for credit risk management. 1 billion plus users use Alipay at least once in a year, representing 83% of China's total population in age group of 10 years to 80 years old. 711 million users use Alipay service at least once in a month. Such a large user base and its engagement with Alipay platform attracted around 80 million merchants accepting Alipay for payment. Around 170 asset managers offering wealth management products, around 90 100 banks offering credits, and around 90 insurance institutes offering insurance products. Over last decade plus, Alipay has grown by leaps and bounds in China, and last couple of years they have been expanding in international markets with presence in 200 plus countries to first target Chinese outbound tourists for payment services in foreign countries. As of now, Alipay has penetrated in Hong Kong and Japan to offer financial services to local population also, and has indirect presence in international markets through stakeholding in local payment platforms such as Paytm in India, Touch and Go in Malaysia, and other countries. These countries, including China, represent coverage of potential 3.6 billion population. When company is doing very well and the largest in its market, there are always competitors who will try to copy and grab business from the company. Hence, for long-term sustainable growth of the company, it's important to have its clear competitive strength, which is called moat. For Ant Group, one of the key strengths is large ecosystem with consumers and financial institutes on the platform. It creates stickiness and network effect. They have come out with very innovative services such as allowing users to invest in fund with as little as $1, providing the instant loan or credit approvals, and many more. Though Ant offers its own financial products on the platform through its subsidiaries, but its significant business is mainly from third-party financial institutes selling its products to consumers through the platform, hence minimizing competition and create win-win relationship with its partners. Ant is able to leverage technology innovation from Alibaba's cloud. It also leverages huge amount of data collected about consumer spending habit through Alibaba's other services such as China's largest e-commerce platform Tmall, Taobao, or Alma, local delivery for the food of Fresibo grocery stores to offer targeted financial services to these consumers. Any company's business model that has network effect provides strong competitive strength. Network effect is where more consumers or partners buy or sell services through the company, makes service product cheaper, and offers more services and product options to consumers, which attracts more consumer partners to join the company to buy or sell products or the services. With regards to Ant Group, they have 1 billion users, which attracts 2000 plus financial institutes to offer multiple products and services, which makes unit cost of products and services lower by leveraging economy of scale of Alipay platform. More services options and the lower cost of services attracts more users to buy partners financial services on the platform. This drives higher revenue, lower cost, and the exponential growth of the profit.
Now let's look at if network effect is really working for Ant. Top two chart shows longer the user stays on the platform, it uses more number of services. On the left chart, 5 in 10 users were using the 3 plus categories of service in 2017, which increased to 8 in 10 in 2019. Now in the right chart, 5 in 10 users were using 5 plus categories of service in 2017, which increased to 4 in 10 in 2019. Now the bottom chart shows the longer the user stays on the platform, the more business volume is generating on the Ant platform. The user that has stayed for the 5 year has been generating 10 times more business volume compared to the year that it had entered 5 years back on the platform. Now the ant has been growing significantly over the last couple of years. Right? Now the question is that whether it will continue to grow in a couple of next years, maybe 5, 10 years at the same growth rate or maybe more. So for that, let's look at the China's overall financial service market. The table here shows what is the overall financial service market size in 2019 for all four service categories where the ant has been focusing and how it is going to grow in 2025. So if you look at the digital payments volume, total volume was around 200 trillion in 2019, which is going to double in 2025. And the ant has almost 55% market share currently in 2019. Now, overall credit balance of consumer and SMBs with the credit of less than 500,000 RMB was 19 trillion in 2019, and it is expected to increase to 50 trillion. And this growth is supported by the fact that consumer credit balance to cash and deposit ratio was only 14% in China, whereas it is 33% in United States. So there is a huge room here for credit to grow for China market to catch up with the US. And additionally, 75% of the population in China do not have credit card. Now, overall personal investable assets in China was 160 trillion in 2019, which is expected to increase to 287 trillion in 2025. And Ant's market share is only 2.5%. And this growth is expected to be supported by the fact that in China, cash and deposit as a percentage of personal investable assets was 58%, whereas in United States it is only 12%. So there is a huge room for China to catch up with US, and as the percentage of cash and deposit as a percentage of personal investable assets reduce, the more and more cash and deposit will be deployed to the investable assets. Now looking at the insurance premium overall in China, insurance companies had collected 4.3 trillion in 2019, the premiums, which is expected to double in 2025. And currently, Ant has only 1.21% market share. And this growth is supported by the fact that insurance penetration is very low in China, as represented by only 4% of the GDP is total premium collected in China, wherein in US it is 11% of the GDP collected for the premium. So there is a huge room for a catch up for the China to 11% of the United States. This growth in financial services has underlying driver. The one which is personal disposable income currently in 2019 was 43 trillion, which is expected to increase to 67 trillion in 2025. As the people have more and more disposable income, they will use that one for financial services and other luxury products and services. Now, no business is risk-free, and similarly, Ant is also subject to many risks. The first risk is regulatory. Right? The financial services being the backbone of any country's economy, it is subject to regulations. Now, the Ant, though it is not providing the financial services on its own, but it just provides a platform for third parties to provide the services to their subscribers, and is also subject to financial regulation. Now, recently, China had imposed 15% interest rate cap on all the financial institutes offering the loan. where the ants was charging the 20%. So obviously there is an immediate impact on the ants business, especially in credit. Now the ant changing name from Ant Financial to Ant Group or the technologies recently, that reflects that they are trying to avoid the any regulation related to the financial industries. Now the second risk is the trade war between US and China. Right? So this trade war might slow down the China's economy, and that may impact the disposable income of the population in China, and they will have the less money to spend on the financial services. And also the Western countries would put the stringent restriction on the Chinese companies, including the Ant. Now, recently there was a conflict between India and China on the border, and in retaliation of it, India had banned 100 plus applications of Chinese. And the Ants having the stake into the Paytm, which is the largest financial payment company in India, so it is also subject to risk of ant trimming down the stack. Next risk is the competition. Few years back, the ant had significant market share in financial services, especially in the payment, around 80-90%. And then the WeChat came and they started providing the payment service. And since then, currently the latest market share has reduced for the ant to only like 54%. And the WeChat is also one of the largest online service providers, and they can leverage the ecosystem and offer the more and more financial services and cross sell and also they create the synergy, and that may impact the the ability of the ant to offer the financial services. Let's compare WeChat financial services with Ant. Now, Ant had 711 million MAU as of June 2020, where the WeChat had 800 million plus MAU as of December 2019, which is positive for WeChat. But Ant had 80 million monthly active merchants versus WeChat, which had 50 million active merchants. In terms of the revenue, Ant had 120 billion revenue as of December 2019 versus WeChat, which had 82 billion in 2019. Ant's revenue has been growing at the 36% annually from 2017 to 2019, where the WeChat's growth rate was higher than the Ant at 42% during the same period. Ant had the significant higher gross profit margin compared to WeChat. Ant had the 46% versus WeChat, which had the 27%. That shows that Ant is able to monetize its user base better and with the lower cost versus WeChat. Let's look at how the Ant generates revenue from its large user base. Looking at the payment service, the Ant charges 0.05% on the payments collected by the merchants. And also the Ant had just recently introduced merchant service in first half of 2020, and expects this business is going to increase significantly over next couple of years. So the merchant service is nothing but allowing the merchants to provide the advertising to their potential customers, and this business is quite high profit margin business. Now looking at the chart on the right side, it shows how the revenue has been growing for this service over the last 3 years. So it is very clear that annually it is consistently growing during the 3 years period. Now look at how Ant makes the money from the credit tech services. So for credit tech, Ant charges around 2 to 2.5% of the all the interest that is collected by their financial institutes through these customers on the platform. And the Ant do not bear the credit risk on the financial institutes which is offering the credit through their platform. But the Ant do have some stakeholding into some of the financial institutes, and do bear the risk indirectly through this stakeholding. But this amount is quite small compared to the other financial institutes on which it does not have the stake and it offers the credit on the end platform. Now the chart at the right side shows the revenue growth of the Ant in the credit tech service. As you can see clearly that it has been going quite significantly over the last 3 years. Specifically from 2018 to 2019, it had doubled the revenue. Where in the first half of 2020, the growth was tapered because of the COVID. Less and less consumers are buying the products into the offline as well as traveling less, so hence they need less credit. Regarding the invest tech service, and charge is 0.5% on asset under management balance that is enabled through the Alipay platform for financial institutes, and this is charged from these financial institutes. Looking at the chart on the right side about the revenue growth of this investment tech, it is nicely growing year on year over the last 3.5 years. Now, in the insure tech, and charges from insurance companies 25% of the insurance that is enabled through the platform. And if you look at the growth over the last 3 years on the right chart, it has been growing nicely year on year, and specifically in 2019 it has grown significantly more than around 2.5 times. And even though the COVID in first half of 2020, the revenue had grown nicely from the 2019, and that is in spite of less and less people are buying the property and the auto insurance, and this increase is mainly coming from the fact that more and more people are buying the health insurance. Now let's look at how is the business volume is being generated on Alipay platform. Now, if you look at the growth of MAUs on Alipay platform, it has been growing consistently year after year from 2017 to 2018, and also in 2020 in the first half it has grown to 711 million. However, the growth has been slowing down. In 2018 it was growing at 23%, and in 2019 it has slowed down to 6.6%, and first half of 2020 is growing at 7.89%. Now in the China, the total population between the age of 10 years to 80 years old is 1.2 billion, and the latest MAU being 711 million, there is a significant room to grow, but I think the growth rate is going to be slow. Now there is a difference between the business volume and the revenue. Now what is a business volume? Business volume is the payment or the credit or the investment or insurance premium that is enabled through the Alipay platform for the financial institutes, where the revenue is the fee that is charged by the Ant to this financial institute to enable this business volume. Now the business volume has been growing in each of the four categories of services over the last 3 years. If you look at the payment service, total payment value has been growing consistently over the last 3 years. In fact, it is growing at the much faster rate than the growth of the MAUs. In 2018, it was growing at 32%, where in 2019 it was growing at the 22%. So what does it indicate? It indicates that per user, the TPV has been increasing. If you look at it, 137,000 per user to 168,000 in December 2019. So that means the users are using the Alipay for more and more payment service. Now, similarly for the credit tech, the credit that is enabled through the platform has grown very significantly, like 92% in 2019, 61% in 2018. Now here there is no meaning of providing the credit volume per user, because recently the Ant has started offering the credit to the SMB customers, and the volume of the credit for the SMB is much larger than the volume for the normal consumers. Now, for the investment tech also, the investment that has been enabled through the platform is also growing at the healthy rate between 20 to 25% last 2 years. And also the per user, the AUM has grown from 4,400 to 5,156. Again, each user is buying more and more investment products through the Lead Pay. Now, looking at the InsurTag, the insurance premium that is enabled through the platform has significantly grown last 3 years from 9 billion premium collection to 38 billion in just in 2019, right? So this again, the growth is much higher rate than the MAUs. So that indicates that the number of premiums or the each premium value is growing significantly per user as indicated here. In 2017, the premium amount collected per user was 18,000 or 18 RMB, where in 2019 it was 57 RMB. So this clearly indicates that the users of the Alipay are much happy with the buying these services through the platform, and hence it creates more stickiness and buying more services through the platform. Now, what we saw in the previous slide was the business volume that was enabled through the Alipay platform for the financial institutes. Right now, the important is that whether the Ant is able to monetize from the large user base and the merchants that is enabling these services through the platform. Right. Now, if you look at this table, the first row indicates the revenue generated on the payment service. Now, as the TPVs was increasing year after year, so obviously the revenue has also been increasing over the last 3 years. Now, the important part is that as the TPV per user was growing, hence the revenue per user has also grown from 71.92 RMB to 78.76. Now, the most important part is that the revenue fee on the TPV has been consistently maintained at 0.05% year after year. This is in spite of the competition from WeChat. And this strongly indicates that there is a stickiness of the merchants and the users using the payment service on the Alipay platform. Now, as we saw in the previous slide, that the credit volume has been increasing year after year, and that is reflected into this increasing revenue for the Ant from year after year. All right. Now, as the credit that was bought by the user was also increasing on user basis, so the revenue has also increased from 32 RMB in December 2017 to 63 in 2019. Now, again, the important part is the revenue percentage in terms of the credit, which has decreased from 2.5% in 2017 to 2.08% in 2019. This is probably the Ant is trying to attract the financial institutes to use Alipay to offer the credit instead of offering the credit directly to their customers. Now, looking at the investment tech, since the AUM year after year was increasing, hence the revenue is also increasing year after year accordingly. Now, again, the AUM per user was increasing, which is reflected also in the increasing the revenue per user from 21 RMB to 33 in December. Now, again, the most important part is that the percentage of the fee charged on the AUM is maintained consistently around 0.5%. And again, this indicates the stickiness of the fund managers and the money market providers as well as the customers on the Alipay platform. Now, similarly, looking at the InsurTech, the increasing TPV, increasing the issuance volume is also reflected into the increasing revenue for the Ant. And again, the revenue per user has significantly increased from 4.64 to 13.58 in 2019. And the revenue in terms of the percentage of the premium earnable is also maintained around 25 to 30% consistently. So this indicates the stickiness of the Alipay platform, and the Ant is able to monetize strongly on the large user base as well as the financial institutes partners on the platform. Now, ultimate question is what would be the valuation of the Ant? Now, this table, I try to estimate my valuation of the Ant. Now, if you look at this table on the left side, it shows all the four categories of the service of the Ant group and what is the revenue in 2019. So the total was 120 billion RMB revenue. And then for 225, I have estimated the revenue for three different scenarios: conservative, moderate, and optimistic. So for conservative, I anticipate the revenue to be growing at to the 400 billion RMB. For the moderate, expected to be around 600 to 7 billion RMB, and for optimistic scenario, going to be around 900 billion to 1 trillion. Now, as the Ant is going to value the IPO at 1.6 trillion, so looking at the revenue and the valuation of the IPO, if you maintain the same ratio, the valuation in 2025 may reach around 5.8 trillion RMB for conservative scenario, 9.3 trillion for moderate, and 13.2 trillion for optimistic. Now the table at the below shows the comparison of the Ant valuation with the global fintech companies like PayPal and Square Inc. in terms of the price sales ratio and the price earning ratio. So the price sales ratio point of view, the valuation is more or less same for the Ant and the rest of the global fintech companies. Now looking at the price earning ratio, the Ant's P ratio is much lower. That is because the Ant had significantly or exceptional profit in last 12 months, and the next 6 months or next 1 year it may not maintain the same level of profitability. And the reason for the exceptional profit last 12 months is because of the COVID situation, that the less marketing cost, specifically in the last 6 months. Hence, the earning was higher, and because of the higher earning, the P ratio is quite low compared to the other two fintech companies. Now, if you are interested to know how did I derive this growth of the four categories of the services revenue in 2025, please provide me the comment in the YouTube, and I will send you the Excel with the detailed calculation of the my estimation of this 2025 valuation and the revenue growth. Now let's summarize key growth catalyst and the risks for Ant's future. For key growth catalyst, the first is China's overall financial market is still at a very early stage, and there is huge opportunity for the growth. Second is considering the scale and network effect of the company, it is very well positioned to grow at much higher rate than overall China's financial market growth. And third is the company could leverage synergy with Alibaba's wide and growing ecosystem to grow its financial services. But it has the key risk, as we have seen. The first is the China international regulation. China contributing 95% of the company's total revenue, and companies' strategy to grow in international market are also subject to regulation, which may taper the company's revenue growth. But the China's second is China government's initiative of digital currency, which may also impact the company's business model. Then third is the competition from the WeChat, which has also very large and wide online ecosystem, and it is focusing on expanding its financial technology segment. What are the next steps for you? If you like this video, please press like button below. It will encourage me to share more such videos of other companies. Now, if you have any feedback or suggestion or any questions, feel free to share in YouTube feedback section. Now, for you, it is up to you to decide whether it is worthwhile to invest in. And thank you very much and have a good day. Bye.